true.
Good morning, everyone. Happy Wednesday. It's July 31st, end of the month. Prices of BTC currently at 9,767. I'm not surprised that we're getting a tick up in prices right as the monthly is closing in about 12 hours or so, 13 hours actually. It's 8 p.m. UTC, or actually 8 p.m. Eastern Standard Time and 12 a.m. UTC time. So you could do the math for whatever time zone you're in or Google it. So basically what we're seeing right now is a slight tick up in prices after tapping that demand zone in 9100. And let me show that to you in a cleaner chart. I know this chart is very convoluted, but one of the reasons why I wanted to show you this chart is due to this particular trend line right here, this one right here. So you see a touch right there, touch right there, and it looks like we're actually headed towards the next touch, towards that trend line, which could wick maybe 10,050, 10,100 or so. Just keep that in mind. So basically right around, this high right here, okay, I would say somewhere around there, okay. So that's something to keep in mind as prices tick up on BTC. If you're thinking about a quick long, that might be an area. But let me sort of show you exactly in a cleaner, bigger picture what's happening, okay? So if you remember from a few weeks ago, I had drawn this regular flat correction right there, okay? Let me show this to you again so you guys are familiar with these. It's important to have this sort of regular flat in mind so you understand exactly how it works, okay? Here's that A wave of the flat correction, B wave. See, you can see 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5 right there. And that's exactly what we're seeing right now is 1, 2, 3, part of the A wave, 1, 2, 3, part of the B wave, and then 1, 2, 3, 4, 5, part of the C wave. Okay, so now what we're experiencing is a movement out of the 5, a potential movement out of the 5. All right, now so far out of this C wave at this bottom, we had this wave 1, this wave 2. Now a few days ago, this wave 2 was somewhere around here, okay, which is about the 78.6 fib level. So I think if we drew the bottom from this area to this area, you could see actually the bottom's a little bit deeper right there, okay? So you can see that the bottom was somewhere around there, okay? Now this wick right here, okay, I don't know of any exchange that had this wick going lower than this wick, okay, down here. So that would imply that this is technically still wave 2, technically, because as long as wave 2 has not gotten deeper than wave 1, or the beginning of wave 1, that would mean that this can still be a very deep wave 2, right? And then wave 3 obviously comes out a bit farther and will stretch out further, and then wave 4, I don't know where it's going to go in wave 5. Now I'm saying this is a possibility. I'm not saying that it's going to happen. I'm saying that this is something that we could keep in mind, all right? Now if you look closely, okay, here's something that's also interesting. Check out this dash line right here, okay, this big wider dash line. Touch 1 right there, touch 2 right there, right, and third touch is right here, okay, where we last touched 9100 around middle of July, and you could see that that same trend line was support again right there, all right, but now it's become resistance. So I find this really fascinating because, this has actually happened quite a few times on BTC. Oftentimes when critical trendline structures like this becomes resistance, all right, more often than not, it does become a good marker for more downside ahead. So I think it's really particular that it's stopping at this particular point if we look really closely, okay? So if we zoom in really closely, you could see that this touch right there, that touch right there, and this is, holding the price down perfectly right here. Now again, if we break through it, I wouldn't be surprised if we hit 10,000 or so, maybe 10,100 at max. but that would imply that then we've broken sort of this, resistance structure, and I think that might imply maybe potentially higher prices. I don't know how high, but wave 3 again could stretch out almost as deep as, the top of this descending trend line from this 13,800 top and then this 13,200 top. So all the way to about 12,200 or so if we basically just went straight up today, or over the next couple days still 12,000. Okay, so that might be something to keep in mind as well for wave 3. All right, now let's go and take a look at something a little bit more differently. Okay, so here is the daily on the BitMEX chart. All right, and I'm using different exchanges to be able to keep in mind, different exchanges have different prices, different wicks. For the most part, the structure is still the same, but having different wicks and different prices here and there really helps us get a full sort of complete view of exactly what kind of structure we're looking at every single exchange. Okay, so with that being said, on BitMEX, you could see that we are not only in this falling wedge that I spoke about yesterday, right? 1 touch, 2 touch, 3 touch, 4 touch, right? That's all you need for a falling wedge. And typically after the 4th touch, what you get is this is the 4th touch, you get a pullback and then a breakthrough. Okay, so I think we might be experiencing that breakthrough, but again, we still have yet to close successfully outside of this descending triangle right here and this big falling wedge, both of which could turn on us in the next 12 or 13 hours. Prices have opened up and closed, well, looking to close nicely so far. They opened at 9,591, so we're currently at 9,766, so close to $200 movement. If you're looking for a safe spot to get in, like I said, you may want to wait above 10,250 because that's the high of this wick right here where we previously got rejected 3 or 4 days ago. That might be a safe spot, or if you want to jump in, wait on the closing of the daily on this chart right here. Who knows, we might close way up here on the daily and then potentially have more upside. All right, or if you want, over the next 12 or 13 hours, wherever this daily closes, if you truly believe that there's going to be more downside, you could just keep shorting. Okay, point is, you have options. I don't want to tell you which one to pick, but I wanted to just show you what the possibilities are. All right, now in this falling wedge, like I said, there's this descending triangle. Personally, in my opinion, I think this descending triangle has a higher possibility of breaking to the downside. We're still contained well within the confines of this red dashed descending triangle. Okay, so I'm still largely just waiting out what exactly is going to happen. It's too close for me to jump into a trade because I don't really have enough risk reward for either long or short right now. I mean, I'm basically buying resistance right now. If I'm buying a long, and for a short, there's really not enough of a potential reward for just $400 or $500 movement to the downside. With my upside is probably another $400 or $500 movement. So the R for this is 1. I'm basically risking 1% for a gain of 1%, which doesn't make any sense to me. If typically you want a R of 2, meaning that you are willing to only risk 1% for a potential gain of 2. So that would mean that, if you basically bought a short up here, say about 10,150, and you see prices turning around, right? Prices are getting weaker, candle spreads getting, thinner and thinner as it gets towards that resistance. That means that your stop could be just above 10,250. So while you buy your short at 10,150, your short is at 10,250, but your downside target is 9,100. You see what I mean? So now your R becomes like this. Okay, so if we're buying it like that, right, this would be your R. Look at that. Your R is 3.13. Why? Because you're risking about 3% for a gain of potentially 9.4%. Okay, so as long as you try to keep your R above 2, folks, you'll be successful. And the way you keep your R above 2 is make sure that your risk is much smaller than your reward. Okay. All right. So anyway, on BitMEX, we're still within the confines of the descending triangle. Haven't closed on the daily outside of this falling wedge. So none of which has been cemented. I would probably say just wait it out. Let me check out the 4 hour as well. Excuse me. On the daily, actually, I do want to show one thing. Okay. I'm going to turn on this pivots table. Remember that on the daily, the more important moving averages are the 50 right now, the EMA 21, the EMA 30, and let's see, I think it was 100 moving average. There it is. I mean, we could use a 200 as well. Way down here. Okay. All right. So the reason I picked this, and we could throw on the Ichimoku cloud as well. The reason I picked this is because I wanted to show you guys the purpose of, why specific moving averages are useful on specific time frames, right? So people often ask that, what are the best moving averages to use? And I think the simple answer to that is, well, what asset are you charting and what time frame, right? So typically what I've noticed is on the BTC chart, 21 and 30 day moving averages since at least, January, maybe even November, December of last year, the black and the white, which are the 21 and the 30, have been extremely useful in this entire run up. Okay, so I'm sorry there's a lot of lines right now. Let me turn off the Ichimoku cloud lines, turn down the Kijun and the Tenkan, and it becomes a little bit more clear. Okay, so notice how the moving averages for now show that the 21 and 30 EMA, not only are they above us, they've now just had their flip on a bear cross, meaning that the higher moving average, which is the white, is now above the black, which is the lower moving average. Over here on this entire run up, you can see that the lower moving average is above the higher moving average, right? 21 is above the 30. So again, not a good sign. And the fact that they're above us, meaning that the price is below the moving average, not a good sign, okay? So the 50 moving average is still pointing up, but the 21 and 31, the 21 EMA and the 30 EMA have turned down. They've had their bear cross and price is underneath it. So at the very least, price could pop up to this level about 10,100 and get rejected. So remember, like I said earlier, on that other chart that I showed you, we have a potential movement of 10,100 where price could still move up and get rejected, not only due to trend lines, but now you can see because of one, the top of the cloud is right there, as well as the 21 and 30 EMAs. All right, we are well below the pivot, which is about 10,700, 10,800. So in my opinion, every pop up I see in price, to me, gives me a better opportunity to short versus longing right here. Because honestly, I mean, at any moment, price could turn down on me, and just crap all over 9,100 and just head down, right, even further to the bottom of this cloud, which is about $8,700 or so. Also, we move towards the 100 moving average, which is this green marker you see right around the bottom of the cloud too. So if we went straight down on this candle today, we could hit it right around $8,700, $8,800. Okay, which obviously I don't want, but I'm saying that any pop-up that you see, in my opinion, is a better short opportunity than a long. Okay, because you still have a lot of overhead resistance to get through. Okay. All right. So now let me sort of answer that other question about which moving averages are best. So again, you've seen that the 21 EMA and the 30 EMA is useful on this chart right here. The 100 could be a downside protection, right, for price, and the 50 EMA or 50 moving average right here was pretty useful, right? Right there, it was resistance. Right there was support. Right there was support. So the 50 moving average also gets used too. But now let's flip on the 4-hour chart, and I want to show you that in this chart, in my opinion, these are not useful at all. Okay, you could see that the 21 and 30 EMA, I mean, they're good moving averages, but they in no way provide a full picture of price action of support and resistance. In my opinion, I think the EMA 50 and the 200 do that much better. Okay, so here is the 50 and the 200 moving average on the 4-hour chart, and typically the 50 and the 200 have actually been very useful. Here's the 50 right there, support, and then over here support right there, resistance right there. This became resistance right there, and then over here both these flipped as a bear cross, held down the price pretty much, and then price collapsed under it, and you could see resistance right there, right? So the point is that you can see why currently the 4-hour chart uses the 50 EMA and the 200 EMA much better, right? And now that they've had a wider cross, this is, in my opinion, still more bearish, and price has to struggle through a lot, all right, to get farther in the 4-hour chart, all right. The Ichimoku cloud again is right around 10,000 or so, which again brings that target of ours, 10,000, 10,100 max maybe, because even the 200 EMA right there is about 10,200 or so. Okay, by the time price reaches to it, it could be about 10,200. Notice that the price is actually currently being met by the 50 EMA right now. Okay, so unless price starts showing you strength, price starts showing you that it's wanting to get out of this sort of movement right here, again, I personally think that being flat, meaning being not in a trade, or waiting it out for confirmations, maybe above 10,200, 10,800 to be safe, could be your best bet. Or you could take an option of longing here and placing your stops much deeper, maybe around, 10,250 or so, or sorry, 9,250 or so, which would be below all these wicks right here. You can't really avoid this one. You could still get torpedoed down, just like as you could see right here. You could see that a massive wick could just stop out everyone and then take off. So maybe to be really safe, you could have your stop right below this right here, about 9,050, but then your risk is so much larger than your potential reward, which is again 10,200. So for a $500 movement from here, right, because that's where the resistance is, you're risking about $600 or $700. So your R is even less than 1. This is why I say that longing currently is really a toss-up, and it doesn't have the best risk to reward ratio. Okay, all right. Another thing that I want to check out is the weekly, like I did yesterday, and I wanted to show you that we are still, oops, I want to hide the drawing tools, we are still really struggling towards that $9,600, $9,700 area, getting back into this white box that we previously had spent about good 4 or 5 weeks in. Okay, if we struggle to get back in this area over the coming week, now remember, this weekly just started 3 days ago. We have another 4 days to go. Anything could happen in the next 4 days, right? This could shoot up in the middle and then just slam down. Okay, so if you want to be safe on the weekly, maybe wait until either prices of this weekly close into this area, maybe 10,200 or 300, or if you again really want to be safe, 11.7 or 11.6 on the weekly closing above might be your really safe bet. Okay, till then, even the weekly tells me that shorting is probably has a better risk to reward ratio. Okay, now let's take a look at the monthly. Okay, and the monthly looks a bit convoluted, but here's the monthly chart right here. All right, now on the monthly, okay, this let me see if I can pull up this chart right here. I'm gonna get rid of this. All right, so here's the monthly chart right here. Okay, now the reason I drew this purple box right here is because in the month of December 2017, I know we had that big blow off top from, the opening of the price was 9,900, and it basically doubled, right? That the high was 19,000 and the closing was at 13,000. And then the next month was really a brutal month. We had, the open at 13,000 and the low of about 9,100, closed about 10,100 or so, right? So this was definitely a very brutal candle right here, almost a bearish engulfing. All right, now what I was trying to say is, even though we have only 13 hours left, crazier things have happened in Bitcoin right near the closing of the weekly and the monthly. So just to keep in mind, right, this could drop another $1,000 or so to close where this one opened. This candle could close where this one opened. This one opened around 8,550. Okay, that's why I have this white marker out. All right, so if that does that, that means that we will then have basically a bearish engulfing. All right, and I guess it could be a bearish engulfing or tweezer tops, however you want to look at it. Both of which on top of an uptrend are still bearish, right? That would mean that that's a big sort of reversal pattern on the monthly, and I would not want to bet against the monthly. I definitely want to largely sit out or maybe even start liquidating more of my positions. Okay, so this is why I'm really cautious for the next 13 hours of, unless I get great opportunities to long or short and quick scalps, I don't want to be stuck in a trade with my capital. Okay, so be very, very careful on the closing of this monthly in the next 13 hours. All right, if we do close this monthly candle below 8,550, or even if we come close to it, say 8,600 or 700, I still think that's going to be incredibly bearish. I don't quite know if we're going to drop $1,000 in the next 13 hours, but I'm just saying that's something to keep in mind. Okay, the RSI again, has a lot of room to go, especially on the monthly chart. And one thing that I found interesting on the RSI was, you could see right here, we came really close to the top of the RSI right here in April 2018, and we basically hit that almost as a double top right here we're basically half a point away, right, from this top. So I find that incredibly scary that price is the RSI is basically double topping on the monthly chart. I know the monthly doesn't show that much. Let me see if I can sort of find a better chart for the monthly. This might be actually better. So here's sort of that April 2018 monthly, and you can see on the BLX it looks a little bit different, but same thing, right? Coming up very close to that sort of double toppiness right there. Okay, but we still do have a lot of room to go on the full RSI, which takes into account the history of Bitcoin, right? We still haven't hit the overbought levels, but remember that we can still pull back deeper, kind of like this run up did in 2016 and 17, where in 2016 June prices went up to, let's see, where was it? Over here, prices went to a high of $783, and then 2 months later they came to a low of $483. So that's almost a 50% drop or so in prices before that big sort of run up, right? So let me see how much of a drop that is. About 40% drop, right? So currently we're at, let's see what we are at right now. We're about at 32% drop. So another 8% could easily bring us to, let's see, 40% drop, bring us to about 8,500. So, you know, if we're repeating something like that kind of fractal right there, where the RSI also pulls back a little bit before it just shoots off for the next, you know, year or so, that could be, you know, something that happens where we pull back towards 8,500 or high 8,000s and then just keep on taking off, right? So just something to keep in mind. All right, folks. I think that wraps it up for Bitcoin analysis. There's nothing to look at in terms of alts. I don't find them particularly impressive right now. But yeah, I hope you learned a lot. I hope you come join the Cryptosomniac community. There should be a Discord link below. And again, be patient. Try to preserve your capital as much as you can so you can eventually grow it. All right. Again, keep this weekly and the monthly timeframes in mind when you are trading, because they are incredibly important, especially when you look at a picture like this, right? Sort of a double toppiness, you know, big wicks poking up to the upside, and then reversing down. This is really a big warning sign, right? So you don't want to be trading warning signs, all right? Hope this analysis helped, folks. Come join Cryptosomniac, and I will talk to you all soon, all right? Cheers.